You're listening to AI Prism from Seoul Economic Daily.
Pre-unicorn foreign capital drops to 16%. Korean banks are racing for crypto exchange stakes. Naver's drone startup defense AI play. And Nvidia's June 5th physical AI push in Seoul. It's Tuesday, June 2nd. Let's look at what this means for startups and entrepreneurs in Korea. So today we're taking a deep dive into a stack of reporting from the Seoul Economic Daily to really uncover the shifting battlegrounds for startups. Our mission is basically to show you the hidden dynamics reshaping where the money is actually flowing right now.
Yeah, and the structural reality you really need to understand right now is this severe foreign capital drought. I mean, let's look at pre-unicorns.
Right.
These are government-selected high-growth startups targeting a 1 trillion won valuation, which is, about 714 million US dollars.
And the government support for these pre-unicorns is huge, right?
It is, yeah. But the funding mix has fundamentally shifted. Over a recent 29-month period, these companies raised 1.76 trillion won.
Which is what, over $1.25 billion?
Exactly. But here's the shocking part. A mere 284.6 billion won, or about $203 million, actually came from foreign investors.
Oh, wow. That's low.
Yeah, it's a steep drop to 16%, which is way down from over 22% during the venture boom.
Okay, so let's unpack this a bit. Does this mean the pre-unicorn badge is effectively like a golden handcuff?
Oh, absolutely.
Because it sounds like you get all these great local perks and matching funds, but it completely blinds these startups to the global VC validation they actually need for a major exit.
That is the exact trap, yeah. Domestic capital can build a large company, sure, but it'll be valued on domestic multiples.
Right.
So without foreign investors bringing market validation and, global network effects before Series B, a NASDAQ IPO or a major cross-border acquisition becomes highly improbable. The pre-unicorn models are optimized for a 52 million person domestic market.
Which just doesn't justify global institutional capital at scale. And that explains the workaround we're seeing in the reporting. I mean, founders targeting global markets are increasingly incorporating directly in the U.S.
Yeah, that number jumped from 8 to 30 startups recently, literally just to bypass this domestic bottleneck.
But, as startups flee the domestic bottleneck for global capital, there's a totally different kind of massive capital deployment happening back home.
Oh, definitely.
We're seeing this infrastructure land grab where legacy giants are aggressively buying up the future. Like, while foreign VCs pull back, domestic #CoSPI heavyweights are deploying massive capital to swallow Web3 infrastructure whole.
Right, and the catalyst here is the Won stablecoin. That's a digital currency pegged directly to the value of the Korean won.
And to own the distribution for that emerging stablecoin market, these massive financial institutions are just buying up the underlying crypto exchanges.
Exactly. Instead of building from scratch, they acquire. Like Samsung Securities and its affiliates just bought a 4% stake in Dunamu.
Right, for roughly 612.8 billion won, which translates to about $437 million.
Yeah, they're literally buying the foundational rails.
So if you are listening to this and building in Web3 right now, what do you actually do? Do you try to build independent rails now, or do you pivot to become a layer on top of these massive banking consortiums?
Well,
I mean, competing directly with institutions holding tens of trillions of won seems like a death wish.
it really is a rapidly narrowing window. The smart move for many founders will be, integrating with the infrastructure these large banks are currently assembling rather than fighting them for distribution.
Right. And we're seeing this exact same infrastructure land grab outside of finance too, right, in deep tech, because tech platforms are realizing they're entirely disconnected from the physical world, and they desperately need physical hardware partners.
We saw this when Naver just bought a strategic equity stake in a drone maker called Ubifly to launch a dedicated defense AI division.
And Ubifly isn't just a prototype shop.
No, not at all. They boast over 10 billion won, or about $7 million, in actual overseas revenue.
Wow. It's like these massive tech platforms are, software brains desperately shopping for hardware bodies.
Yeah, they just can't build the physical layer themselves.
Right.
And this is exactly why Jensen Huang from Nvidia is in Seoul on June 5th prioritizing Omniverse.
Which is their industrial 3D simulation platform.
Yes. And Nvidia knows that before physical AI, like those drones, can be deployed, they have to be validated in 3D simulation platforms.
Right, because software companies are desperate to prove their tech works in the real world.
Exactly. It proves that deep tech startups with actual revenue and quality-controlled production, not just flashy tech demos, are today's premium acquisition targets.
So, deep tech startups have the physical infrastructure big tech wants. But what if you aren't building drones or Web3 rails?
Well, we've talked about tech giants buying up physical infrastructure, but you really need to look at your own operations for hidden assets.
Like what?
Take something as mundane as Korean parking platforms. Right now, they are silently transforming raw parking utilization data into B2B dynamic pricing software.
Wow.
Yeah. A reminder for you to look at your own company. Your biggest asset might actually be your unmonetized data just waiting to be leveraged.
That's today's AI Prism Founders. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a 1IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.